Divided the management of rights. Last week, the company emerged as the lowest bidder for an inspection contract. It is expected to earn 65 crore rupees through this order over a period of 5 years. But in more important news, RITES did report a slightly soft quarter one. This is both for the top line and bottom line. We saw them come under pressure. The revenue was down around 10%, and the margin was pretty steady at around 29%. So to discuss how things are looking now that, we're largely into Q2, we have the CMD of the company joining us, Rahul Mittal, to take some questions on Q1 and the road ahead as well. Mr. Mittal, thanks a lot for joining us. This is Pavitra. Like I was pointing out, Q1 has been a little bit weak. We definitely did see some weakness in the export segment, and the execution looks like it was a bit muted. Can you tell us what's happening on that front? And now that we are into Q2, has that sort of picked up, and are you seeing better execution now?
Good morning. Yes, you were correct. Q1, we started this FY with two major challenges. One was this stream of revenue of ours, that is export of rolling stock. So our order book at the beginning of FY was only about 100 crores. And this was the balance of the two orders that we received pre-COVID, Mozambique and Sri Lanka. And we didn't get any orders for about 2.5 years. And that was the biggest challenge in the export stream. The other main challenge was the impact of the QA stream of business, where we do inspection for the railways. So with the new policy, railways did a tender and divided this entire revenue into 4 different players. Now with this, which impacts about 60% of my inspection stream of business, the rates also came down by about 1/5. So both these were major challenges at the beginning of the FY. And that's why in the first quarter, our aim was to focus on our project consultancy revenue, which saw a 10% increase year on year. And that's why we could minimize the impact of these two challenges in Q1. Moving forward, that's going to be our main focus, that in coming quarters, we reduce the impact of these two challenges to the minimum.
Mr. Mittal, we'll come to your consultancy business, which is doing very well, a revenue growth of 10%. And I believe the margins there are also 44%, so much higher than the overall company average. I'll get to that in a bit. But just to close in on the topic about exports, I believe there were 2 large orders. One was Mozambique and the other one was, Zimbabwe, where you were L1 and you were hopeful that these orders would convert. The L1 will convert into an order. And Zimbabwe is an 850 crore order and Mozambique was a 500 crore order. Is there any progress on converting it into a finite order?
Yes, you're correct. The Mozambique, we were declared L1 for locomotives and wagons. It was a global tender. And that's what we declared. And we haven't added it to the order book because the tender finalization process is on. We are hopeful that it should culminate into an order in the coming weeks. As far as Zimbabwe is concerned, there was an agreement signed again for locomotives and wagons during the CII summit a few months back, the Indo-African summit, which also gave us a commitment of 9 locomotives and 315 wagons. And however, it was subject to the approvals of their funding arrangement, which is also moving rapidly, and we are monitoring it. We are again hopeful that it should fructify into a finite order in the coming weeks and months. So with these two, as I said, the positive movements are there in this challenge, this stream of business, which is a challenge for us at the beginning of the FY. And we are hopeful that in the coming months, we should be able to add on to our export order.
Okay. I'll come to the final numbers in just a bit in terms of some estimation that you can give us, both on exports, but also a word on railways. Like you mentioned that the latest contract, which is for service and testing, you're saying that got divided amongst 4 players. Is that the direction the railway is taking? So are you anticipating lower revenue from the railway vertical going forward, if indeed that's the way future tenders are going to go as well?
Yes, so no, there are 2 different orders of inspection. The recent one, which we declared as L1, that was for inspection of rails at the SAIL Bhilai plant, which we have been declared L1. We are the only player. The previous order, which came about a few months back, which started cutting in from this FY, that was for the inspection of the other railway products, the non-rail products, which they divided among 4 players, and we are one of the 4. So the trend has been that these areas of rail consultancy, whether it is the inspection business, even the other project consultancy which we do for railways, for more than a year now, as a declared policy, all these works are being done through a competitive open market bidding. So that obviously is a challenge. However, I see it as a challenge as well as an opportunity, that while in some cases, there may be hits in the rates and the margins, but since as a company, we are used to competitive bidding across other sectors, metros, highways, buildings. So I think we can fill up the space where other such, up-tier companies would find it difficult to, tackle this change scenario.
Okay, so given that there are so many moving parts, just tell us, your order book right now is 5,700 crores. That includes, of course, the consultancy business as well. How much do you expect to close the year at in terms of just the order book growth? And how much of it will perhaps come from exports? How much will it be, railways? If you could give us some breakup on that order book mix.
See, the order book of 5,700 crores as of 1st July, that had only a balance of about 50 crores on export. So as I said, as far as export is concerned, we are hopeful that these two should mature in the coming weeks and months. They are all in the range of about 500 to 600 crores. Further, there are other opportunities in the export where we have either bid for or are in discussions or for a G2G agreement through the LOC. So we are hopeful that some headway should be there. As an overall, as you correctly said, my project consultancy stream is growing very rapidly. In fact, in this quarter itself, in about 1.5 months, we have already got 42 plus orders. So if you see, last entire year, we got 250 orders. In the first quarter, we got 70 orders.
Yeah.
And in this quarter, in about 1.5 months, we've got about 42 orders. So our goal and vision is an order a day. We are currently at a strike rate of about 0.8. My entire team from top to bottom, our goal, dream, vision is to aim for an order a day. And I'm sure by the end of this FY, we are hopeful of reaching that target.
Okay, Mr. Mittal, we will leave it at that. Thank you very much for joining us and taking us through your outlook. That is the management of RITES talking to us about, where they really see business headed from here on. But with that, we do need to get in.